Hi friends, this is Ushma. Welcome back to my channel. I hope you are having a fantastic day. First of all, congratulations on your plan to buy your dream home. Watch this video to ensure you follow the right process. Here's a checklist to keep in mind while purchasing a house in India. Whether seller is a resident or an NRI, there are important tax and legal compliance you must know before finalizing the deal. Stay tuned as we break down all key points in a simple and structured way. Checklist. Due diligence before buying. Buying a property is more than just paying the seller and getting possession. It requires a thorough background check. You should ensure the property is not disputed and title should be verified. Check for legal heirs and their property consent if it's an inherited property. Verify ownership documents, share certificate, possession letter, property tax receipts, etc. Access the neighborhood. Is it safe and suitable for your needs? And if it's an under construction property, check project timelines, penalties for delays and builders' credibility. Payment should be through bank transfers. Avoid cash transactions. Payment should be made through bank transfers only. Cash dealings can trigger income tax scrutiny and cause legal complications. Proper sale deed is a must. Always get a legally drafted sale deed. If the seller is an NRI, this must be explicitly mentioned in the deed for the proper TDS compliance. The deed should include sale consideration, seller details, property description, tax deduction details, etc. Seller's availability and power of attorney. The seller must be physically present at the registrar's office for the sale deed execution. If an NRI seller cannot be present, they must authorize someone via notarized or apostilled or adjudicated POA, whatever is applicable as per Indian laws. Multiple sellers, proportional TDS deduction. If there are multiple sellers, TDS should be deducted proportionately based on their ownership share. Sellers sometimes insist on deducting TDS for only one seller, which is not correct. If the sale deed does not mention ownership percentage, it is assumed to be equal among all sellers. Multiple buyers, each one's TDS obligation. If there are multiple buyers, each buyer is responsible for TDS deduction based on their ownership share. Practically, one buyer deducts TDS for all, but this is incorrect. All must comply individually. Home loan considerations. If taking a home loan, ensure the bank disperses the amount directly to the seller. Some banks require prior tax compliance checks before loan dispersal, so coordinate well in advance. Check loan eligibility, interest rates, processing fees and prepayment penalties before finalizing. Lower TDS certificate for NRI sellers. If an NRI seller expects lower capital gain tax, they can apply for a lower TDS deduction certificate under section 195. Buyers should ensure the seller has this certificate before making payments. Otherwise, full TDS will apply. The process can take time, so buyers should actively help the sellers to avoid transaction delays. Buyer's responsibility for TDS deduction. The buyer is responsible for deducting TDS, not the seller. If TDS is not deducted properly, the buyer may receive a tax notice. Here are the TDS deduction rules. If seller is a resident, then section 194 IA will be applicable and 1% TDS should be deducted if property value exceeds rupees 50 lakhs, including token money. While seller is an NRI, section 195 will be applicable and TDS rate will be 12.5% on sale consideration if asset is long-term asset, while on short-term capital assets TDS rate will be 30%. Surcharge and cess apply additionally. If the seller has a lower TDS certificate, TDS must be deducted at the approved rate instead of standard rate. TAN requirement for NRI sellers. If the seller is an NRI, the buyer must obtain a TAN. TAN is tax deduction and collection account number. TAN is not required for resident sellers, while it is required only and only if seller is an NRI. It takes about a week to get a TAN from NSDL Pune via email. Depositing TDS and filing returns. After deducting TDS, the buyer must deposit it with the government within the due date. Buyer should file TDS return Form 26QB for resident sellers and Form 27Q for NRI sellers, and he should issue a TDS certificate in Form 16A to the seller. When the seller is an NRI, the buyer should provide the TDS challan immediately after remitting the TDS to the income tax department, while the TDS certificate will only be available after the end of the quarter. Buying a house is a major investment, and doing it right ensures peace of mind. It's highly advisable to consult professionals like a chartered accountant and a lawyer to avoid compliance issues. If you have any questions, drop them in the comments below or reach out to us for assistance. See you in the next video. Take care.